Record $4,000 gold. You'd think this fixes everything for a miner, right? But somehow we have an exploded tax bill, an abandoned mega project, and literally a corporate war brewing. You're listening to Earnings Unscripted, where we unpack what actually happened in today's earnings. It's February 19th, 2026. We're looking at Newmont, ticker NEM, and their Q4 2025 results. And Miro, this is just a completely wild combination of data.
It really is a paradox in a spreadsheet because the operational numbers are staggering. Revenue hit $6.81 billion, up 23% from last quarter. And that's purely riding on realized gold prices soaring to $4,216 an ounce. But then you look at the bottom line and GAAP EPS actually fell to $1.19 from $1.67 in Q3.
Right, and just a quick reminder for everyone listening, everything we discuss here is strictly our personal opinion, not financial advice. But wait, hold on. How do your earnings drop almost 30% when the gold you dig up is 19% more expensive?
Well, reality caught up. It was a $779 million non-cash impairment from indefinitely deferring the Yanacocha sulfides project, plus a massive sudden jump in foreign taxes. But look, if you strip those out, adjusted EPS was $252. The underlying engine is absolutely printing cash. They generated $2.81 billion in free cash flow in just 90 days.
Wow. Wow. But okay, so the stock tape today was totally dramatic. It rallied steadily all day right through the close and peaked at 128.78 exactly as the 5:30 earnings call kicked off. And then...
Can I jump in? Because that exact minute is when the illusion broke.
Oh, it completely tanked. The second management started speaking, the stock reversed and sold off aggressively, dropping almost 6% to close out after hours near 120.90. I mean, did they just insult everyone on the line?
Oh, well, just Barrick. They announced they formally issued a notice of default to Barrick Gold regarding operations at Nevada gold mines. The two biggest gold producers in the world are officially feuding. And on top of that, management guided 2026 as a literal quote-unquote trough year for production.
Oh. Wow. Okay, so record free cash, but you're suing your joint venture partner and bracing for a production trough. That definitely explains the panic sell-off. All right, let's look under the hood.
Well, if we actually look under the hood, the engine is running incredibly hot, but they are intentionally disconnecting some of the cylinders. I am talking about the Yanacocha decision.
Right, that huge impairment we just mentioned.
Yeah, the $779 million write-off. But the cash value is actually the boring part. The real shock is the physical inventory. They indefinitely deferred the sulfides project, which means, well, the CTO said it outright on the call. Quote, we reclassified approximately 4.5 million ounces of gold back from reserve to resource. End quote.
Wait. So they didn't just write off the money. They basically wiped 4.5 million ounces of gold right off their immediate to-do list?
Exactly. They flushed it from the proven and probable column straight back to maybe someday. Which is, look at the timing of this.
That's exactly what is so crazy to me. Gold is sitting at $4,200, literally a record high. And you are telling the market you cannot profitably mine this massive mega project? How does that even make sense?
It makes perfect sense if you are finally exercising real capital discipline. I mean, previous management teams would have absolutely pushed that project through just for the ego of top-line growth. But the capital expenditure to build out those sulfides would be a black hole. They looked at the math and said, sorry, it's a terrible return on capital, even at $4,000 an ounce. Let's just walk away.
I guess that takes guts, shutting down a vanity project when you have so much cash coming in. But actually, speaking of cash falling out of their pockets, I want to pivot to where that money is going. Because, correct me if I'm misreading the report here, but host governments are suddenly lining up to take a cut.
Oh, they always do. Sovereign risk is a highly correlated function of commodity prices. When margins expand, governments recalculate the math.
Right. So looking at Ghana, they had this 10-year stability agreement, basically a tax holiday, and it expired literally on December 31st.
Mm-hmm. Just poof, gone.
Gone. And now Ghana is hitting them with a 35% corporate rate, plus all these new sustainability levies. The report says that if the new sliding scale royalties pass, it could add roughly an extra $310 per ounce to their local costs. That is a massive margin wipeout for that site.
It is. And actually, it is not just future costs. It hit them this quarter. The GAAP net income dropped so hard precisely because they took sudden, massive tax adjustments. They had to recognize $384 million out of Papua New Guinea and another $165 million out of Ghana on unremitted foreign earnings.
Just to sanity check that, unremitted earnings, meaning cash they made over there and were just quietly holding offshore?
Yeah, essentially. The accounting rule is you can defer taxes if you plan to reinvest that cash locally forever. But management finally had to admit they can't confidently claim that anymore. So they took the tax hit now. $500 million in pure tax expense just materialized overnight.
Jeez, it really is like winning the lottery and suddenly every distant relative is banging on your door with an invoice. Like, hey, remember me? I'm your local tax authority.
That is, well, it's a very unscientific metaphor, but mechanically accurate. You are digging up their sovereign dirt, after all. So if you step back, you have a guided trough in production coming next year. You have tax holidays vanishing globally, and they are in open conflict with their biggest operational partner in Nevada.
So balancing all those heavy reality checks against this amazing free cash flow engine, where does this actually leave their trajectory? Like, how is the market supposed to price this going into next quarter?
Well, I think the market is going to have to start pricing them almost like a utility, which is exactly what management is aiming for here. They know 2026 is going to look ugly on paper with that planned production trough. So what do? They anchor everything with this new permanent $1.1 billion base dividend, plus, ratable stock repurchases.
Right. It is basically a giant financial pacifier. Because honestly, if you are holding a major gold miner during record price highs, you want reliable payouts, not, soap opera drama with joint venture partners.
Exactly. And sorry, there is one more structural pivot they made that feeds right into this. They officially switched their guidance metric over to a byproduct basis.
Wait. How does an accounting metric actually change their trajectory?
It doesn't change the dirt, but it changes the algorithm. By treating secondary metals as cost credits, their all-in sustaining cost suddenly drops to roughly $1,680 for next year. It makes them screen significantly cheaper against peers. It is, well, actually, I should say it is very smart window dressing for a lean operational year.
Okay, so they are really smoothing out the optics. But looking ahead to next quarter, it feels like everything is going to ride purely on execution. We are definitely going to have to watch how quickly this Nevada Gold Mines dispute with Barrick escalates or if they settle it. Plus, they have that incredibly tragic fatality at the Autonomy site, which froze their shaft development.
Yeah. The operational margin for error is effectively zero right now. The old mining thesis was just buy gold and hope. The new Newmont pitch is we are printing free cash flow, and we promise we will not set it on fire, which in this sector is actually a fiercely competitive thesis.
The promise not to set your money on fire. The ultimate Wall Street pitch. All right, I think that is a beautifully cynical place to wrap up today.
Yeah, let's leave it there.
All right, that will do it for this episode. If you want these earnings drops to just show up automatically, go ahead and follow the show. As a quick heads up, we use AI to pull the filings and transcripts and summarize what actually mattered. So we would love to hear your thoughts. If you have feedback or a ticker you want covered, email us at earningsunscripted@datamadness.ca or hit the X link in the show notes. Thanks for hanging out, and we will catch you next time.